Apple recently announced that they're going to do a 4-for-1 stock split. So what is a stock split? Let's dive in. What's up, Spark Investors? It's Kevin, and so today we are going over stock splits. What is that? So there's two types of splits. There is a regular stock split, and then there is a reverse stock split. A regular stock split is generally seen as a good thing, and a reverse stock split is generally seen as a bad thing. However, neither one of them adds or decreases the stock's value at all. A regular stock split is going to multiply the outstanding shares by whatever multiple that the company issued, and it's going to divide the stock price by that multiple. So in the case of Apple, they're doing a 4-for-1 stock split. So for every share that you have, you are going to get an additional 3 shares, so 4 shares. The stock price will be divided by that multiple, so 4. So what happened right now, Apple's stock price is $427, so divide that by 4 is about $106. They do this to keep the price level lower so it's more attractive for retail investors. You can do fractional shares, but when you just look at it, $100 sounds a lot better than $400. And there's just some people that just like to have an entire share. This also increases the number of outstanding shares by that multiple, so this results in more liquidity for the stock. I sold off some of my positions and slimmed down my portfolio so I could have 0.86 shares of Apple right now before they split. The last time they did a split was in 2014. They did a 7-for-1 split. They were trading a little bit more than $700 when they made this announcement, and after the split they were trading at $92. So for Apple, this stock is probably going to continue to grow for years to come. It's going to grow before the split, so I'm getting in now, and it'll continue to grow after the split. What do you think that Apple's price is going to hit before the split? Let me know down in the comments. Reverse splits work just the opposite of that. A lot of times this is companies that aren't performing too well, and they're generally the ones that have the issue of potentially getting delisted. In order to not get delisted, they sometimes have to do a reverse split. If their share price drops below $1 for a certain period of time, they would do this so that it would multiply the share price by whatever multiple they get so they can get above $1 and be back in with compliance. This also decreases the number of shares that they have outstanding. In May, Aurora Cannabis did a 1-for-12 reverse stock split. This multiplied the price by 12, and then it divided the shares outstanding by 12. It closed at just around 70 cents before the split, and then after the split took effect, it was then trading at about $9. For them, this may have been a good thing because it reduced their outstanding shares from over 1 billion to just over 100 million. And for ACB, they had better than expected earnings, and their price increased dramatically, and they had a pretty good run there for a minute. And right now they're still trading higher than they were after the reverse split. They're trading at about $10 and some change, so up a little over $1. If we wanted to compare apples to Aurora Cannabis and we divided the share price by 12, it would now be trading at about 86 cents versus I think the 71 cents that it was trading at before. Thanks for watching, guys. We super appreciate it. If you like this, make sure to hit the like button, the subscription button, and then the notification bell that you can stay updated with all of our current content. If you haven't already signed up for a brokerage, you can do that. Referral links down in the description. You can get 3 free stocks, one for signing up for Webull, another one when you make a $100 deposit, and then a third one when you sign up for Robinhood. See you next time.